Hello everyone, Dividend Enjoyer here with a stock analysis video on Chipotle Mexican Grill Inc., ticker symbol CMG. Currently, the stock trades for $56.70. The stock is up 22.62% over the past year. The market cap of the stock is $77.26 billion, and the price to earnings ratio is 52.69. Chipotle does not currently pay a dividend. Its 52-week low is 46.15, and its 52-week high is 69.26. So it's kind of in between those two numbers right now. I feel like Chipotle is a pretty straightforward company to understand. Here we have some analyst ratings on Chipotle. We have obviously a mix between buy and hold, with currently 21 rating it a buy, 4 rating it overweight, meaning they think it'll outperform the S&P, and 11 rating it a hold, with 1 actually rating it a sell. The current price is 56.70. The low price target is 56. The high price target is 75. The average is 67.97, and the median price target is $70. Now, I want to take a minute to kind of talk about just the Chipotle business model and just the fundamentals of the business as a whole. And before we get into this, I just want to say two things. First off, I'm not a financial advisor. This obviously is for entertainment purposes only. It's not financial advice. And I also want to say that I have a very strong bias against the fast food stock industry. I do not like fast food stocks. They're like, in my opinion, some bottom tier stocks because there isn't a lot of growth. Because a lot of these fast food companies have become oligopolies to the point where, you literally can't go outside without seeing a Starbucks. How is Starbucks going to sell me that they're going to have, double digit growth consistently every year for the next 9 years when there's a Starbucks in every single, Walmart, wherever? I mean, wherever you go, any hotel you go to, there's a Starbucks there. That's how I feel about Chipotle too. If you go on your, whatever maps, if you're in an urban area, there's a Chipotle probably 2 miles from you. I don't buy that they're going to be able to, franchise a bunch more stores and make a ton more growth. I also just want to be completely pessimistic about a stock to the point where I will only buy it if there are no terrible things I can think of happening to the stock. I want stocks that are so good that I can be fully pessimistic and still see that it's probably going to be, um, a good buy. And so with Chipotle, I have a very, very low valuation of it on my DCF model. And I think that that's very fair because I don't think there's a lot of growth going for them. And I also think that because they're not really debt financed, their cost of capital is higher because they're just fully equity financed. So that's going to drive their discount rate up. I think it's better to not have debt personally, but I also think that Chipotle just it's run up an amazing amount, but they've already raised the prices. So how else are they going to make more money? Unless they can pay the employees less or sell a significant amount more, it just doesn't make sense to me that they're going to make more money. It also doesn't make sense when you already have so many franchises, right? I don't think that there's going to be a significantly higher amount of Chipotles just being built, that's going to accommodate the kind of expectations that I think Wall Street really has. Now, they've beaten a lot more, and to be honest, I'm going to be completely honest, I, you know, I don't understand why they're as big as they are. I don't understand how they're making as much money. They have a lot more competitors coming. Expectations are just way too high. And I think everything has to go well for Chipotle for them to be able to realize their current valuation. And I don't think that what they have right now is sustainable. I think that the stock is probably overvalued more than likely. And, just I do not buy fast food or any kind of stocks like that because there's a lot of money that has to go into it and there's a lot of risk. There's a lot of competition. Um, it's just not a consistently good thing. And if the economy goes down, Chipotle with their high prices are going to suffer. So, as Americans do worse and worse, Chipotle is going to do worse and worse unless people just don't want to make food. Then I guess Chipotle is going to make a lot more money. Um, but I just love to be very critical of stocks and don't take this as like a personal offense if you're a Chipotle stockholder, I just personally want to, really be very negative about stocks all the time until I find ones that I can't have a negative case for, and then I buy those stocks. That's kind of my philosophy. Um, Clearly, this is very critical, like I was talking about. This gives a fair value of $29.74, assuming they're able to raise the free cash flow by 15% a year. Um, Maybe the analysts know something I don't. Maybe my discount rate's a little high. I could bring it down to 6%. I think we can model with that. That's fine, whatever. But keep in mind with my old discount rate, Chipotle is just overvalued in my opinion. Because even a 15% growth rate, and we can even put this down. We can put this down to 4. Okay, then assuming a 4% weighted average cost of capital, which is absurd right now. Okay, which is absurd. You would still need to get at least about a 6% growth rate of the free cash flow for the next 9 years. So this is a company that's had a lot of fluctuations and kind of differences in the cash flow, as you could see from here. And there's been periods of just low growth, like from 2021 to 2022, you had 0.53% growth of that free cash flow rate. And um, I just don't see this as being a consistent thing. And I think this discount rate's too low also. I think 6%, probably closer, probably even too low because I really did calculate a correct weighted average cost of capital. They have no debt, which actually kind of hurts them. I think they just make interest off of debt from what I saw from the balance sheet and my research. So, yeah, Chipotle, I don't think you should buy this. 77%. I don't think you should buy this stock. I think it's overvalued. I think it's better to steer clear. I just think expectations are too high, and they might smash it out of the park. This could be, I could be totally wrong. I just don't think that with the opportunity costs of owning some of these other companies that you're going to want to look at Chipotle honestly and say that this is a buy. I think this was a buy a couple of years ago. I think it's run up way too much. I think people are way too bullish and way too optimistic about this stock. The stock is just bloated. I don't see the potential growth. And, in the words of Shark Tank, for those reasons, I'm out. So that's the video. Please hit the subscribe button. Please hit the like button. I appreciate you guys. Bye.